So hello there, this is Kelvin and welcome to Elisha FX. And today's market analysis will be analyzing the Bitcoin against the US dollar. Of late, the crypto market has been a huge bullish, that is in the weekly, daily, and the 4-hour time frame. But we have recognized a possible reversal to the market in all those 3 time frames. And so in today's analysis, we'll be looking for a selling opportunity. We have recognized the trend of the market and we have seen that we are most likely to witness market change. So we indicate the area of interest. So the area of interest is simply the point in the market where the market has retested a couple of times and it has rejected that area. So it can either be on the selling side or on the buying side. But in our case, it was on the selling side before the market finally broke through, as you can see. And after the market broke through this area of interest, it has not yet retested this area, as you can see. And as it broke this area of interest, it created, or rather it left behind, a gap. That is what we refer to as the fair value gap under the 1-day time frame. So this is most likely to be respected because, like we said, the fair value gaps that are in a higher time frame, they are more respected than the fair value gaps that are in lower time frames. So let's use the line to indicate the movement of this market and to show you exactly where the change of the market is. So like you can see, there was a huge bullish there all the way to the top, and then let me try to extract this line first, the line graph, away from the main market. So like you can see here, I've identified the main movement of the market, like you can see. And then in this same movement, we have a rejected area, which we can say the market reached, and then it bounced off 3 times. So this is what we call like the triple top. So like there are reversal structures in the market, a market structure, such as the double top, double bottom, triple top, triple bottom. And that means like the market will hit one specific area maybe 2 or 3 times before it changes direction. And in our case, it has hit the same specific area 3 times, as you can see there. It has hit the area 3 times, and then after hitting that same area of resistance 3 times, it went on and broke the previous low. So let me just show you exactly where the break is. Under the line graph that I've extracted, that's where the break is. But if I was to take this into the actual candlestick market there, this is where the break was. So let me just try to zoom in a little bit. Over here. Yeah, so the line graph now is, I think we are done with the line graph that we drew up aside. because it has helped us just identify the movement itself and then where exactly the break was of the market. So as you can see here, after zooming in, that here exactly this point, this is where this market broke the low, the previous low. So there was this low here that was created down here in the market as it was moving on the upper side, and then the market finally came to break it. Yeah, so let me just indicate for you guys where exactly the triple top was. So here on top here, this is the resistance level where the market hit 3 times before it came and broke the previous low there down. So yeah, this is the triple top. Then if we were to take a trade in this one, I'll be waiting for the market to retest right there where there was the break of the previous low. Then it will go all the way until it hits this fair value gap that was created down here. So if I can indicate this with the losses and the profits that I would take and where I would put my stop loss, this is exactly how it can play out. And so to indicate the stop loss, the take profits, and the selling order, this is how exactly I would place my order. So exactly at this point where the break was, I would be expecting a retest, and then just above this previous high, that's where my stop loss would be, and my take profit would be split into 3. So like you can see there, that's like a 1-to-4 risk reward ratio. Then just below this wick here, so as you can see, there is a wick that was created in this upward movement, and I'm pretty sure the market would want to fill up this wick. So that is where exactly my take profit 1 would be. Then take profit 3 would be way down there where there is the fair value gap. So yeah, right there, that's where there is 1. There is take profit 2, and then the 3 would be down there. But for now, as a trader, you would want to be a little bit more realistic and go for something that is more viable, which is the take profit 1, and there we have the risk reward ratio of 1-to-2, because we are pretty much sure that the market will hit that point within a couple of moves. So if we play the market, you can see that the market went exactly and retested at that same level of break, the breaking point there, and it started moving towards the downside. So as you can see, just after a couple of candles, the market was halfway to the take profit 1, and there is a huge downward movement there. As you can see, it touched take profit 1 and it touched take profit 2 as well. With that wick that was created there, it shows that the market has actually passed the take profit 2. So if you were taking a trade out there, it means that you would have taken a 1-to-4 profit out of this. So after this huge bearish movement, the market is more likely to retrace before it can continue with the down movement. So as you can see, as it was moving downward, it created another fair value gap over here, and this is exactly where we had our break of structure. So as you can see here, this is where the fair value gap is. And then just above that, this is where exactly there is a break. So the market is more likely to go and retest that break. And we have two things so far. So we have the break as well as the fair value gap at the same point. That's indicating that the market is more likely to bounce off from that area or from that zone. So over here, that's where we are expecting the market to bounce. So if I was to indicate this movement, exactly this candle here, we move from there all the way up to retest that break under this fair value gap, and then continue with the downwards until the fair value gap that was created in the upward movement. As you can see, this is a movement that we're expecting now, but this is a 1 day time frame, don't forget that. So that small upward movement can equally be capitalized, or rather you can trade that small movement to the upside. So as you can see, this is an indicator, this candle here that formed. Let me use an arrow. Let's see, where can I find this arrow? Yeah, this arrow here, over here. Yeah, so this candle here, this candle shows a huge market rejection on the downside. So the buyers are in the market from this candle. That's why it's important to learn the candlestick patterns. So this will tell you like the market is now retracing to the upwards and more likely to reach that fair value gap that has been created. So if I was to trade this upward movement, I would place a buy exactly where the market is right now, and then my stop loss will be under this wick here that has been created, and then take profit to be up there where the break was. So I'm expecting the market to move all the way up there, and this would be able to give you like a risk reward ratio of 1 to 2, which is equally good, a good trade that you can still take. Yeah, so over here, down here, this is exactly where the stop loss will be, and then the trade will be over exactly there. But in our case, we are still trading the downward movement, so we will not enter into any buy. We wouldn't enter into any buy rather, and so we'll try to focus on where exactly our analysis is taking us. So yeah, I'll get rid of that upward movement. So yeah, if the market was to come and retest this break here on top, so yeah, I wouldn't use this as my stop loss. Rather, there is this high, the previous high that was created. Let me indicate here, this here. So this is the previous high that was created in the market. It means that that previous high will be our stop loss if the market was to come up to this break up here and the fair value gap up here. So if I was to indicate my stop loss, my sell order, and take profits, this is exactly how I've taken, or I would take the trade. So yeah, over there, and then the stop loss will be just above that previous high. My sell order there, then my take profit would exceed all the way to that fair value gap that we are anticipating the market to go and retest. As you can see, so this was the analysis on the cryptocurrency, or rather the Bitcoin against the US dollar. This is how easy it can be once you are able to know the movements of the markets and the structures and everything. And yeah, so this is the movement we'll be expecting in a couple of days, and if all goes well, we can even take a trade in this market. Otherwise, thank you for watching. This is Elisha FX. Peace out.